SEC Chair Gary Gensler, far too many frauds and bankruptcies. The Securities and Exchange Commission chief shared his views on the crypto industry. Earlier this month, I had the opportunity to speak with U.S. Securities and Exchange Commission SEC Chair Gary Gensler, recognized by CoinDesk as one of the most influential figures in the crypto industry over the past year, about how he views his agency's role in the digital asset world. You're reading State of Crypto, a CoinDesk newsletter looking at the intersection of cryptocurrency and government. Click here to sign up for future editions. The crypto industry has its share of bad, or maybe inept, actors. After the past year, that point can't really be argued. I spoke to SEC Chair Gary Gensler earlier this month as part of my reporting for this year's most influential series. The SEC chief and the agency he oversees continue to remain the most prominent regulatory body for the U.S. crypto industry, and with good reason. While crypto companies look for state money transmitter licenses and look to comply with anti-money laundering rules, much of the industry's trading falls within the SEC's bucket or not, depending on who you ask. Crypto's entrepreneurs have generally built a business model around noncompliance with the law, the SEC chief said. Gensler, one of the industry's favorite, or perhaps least favorite, foils, was recognized by CoinDesk as one of crypto's most influential figures through 2023. In the past year, his agency has sued crypto exchanges like Coinbase, Binance and Kraken, begun reviewing a new slate of spot Bitcoin exchange-traded fund ETF applications, and started outlining a still-untested pathway for companies to list and trade digital assets in compliance with the agency's vision of how digital assets fit within existing law. But in Gensler's words, much of his focus is on addressing a field that's rife with fraud and where some companies fail to protect their customers against wash trading or other issues. It's a view he's reiterated a number of times, pointing to the bankruptcies of the past 18 months or so as an example. While he has deep respect for the investing public, Gensler told CoinDesk he does not believe crypto investors are receiving appropriate disclosures from the various projects they may be buying tokens for. There are far too many frauds and bankruptcies out there, he said. Within the crypto remit, Gensler said some of his concerns included companies commingling customer funds, a concern that's shown up in some of the SEC's complaints against crypto companies this year, and trading against their own customers. The SEC is reviewing a number of outstanding rules that might affect the crypto industry, though he said he wouldn't prejudge. Then when asked about how he looked at one, as an example, he highlighted entrepreneurs in the sector a number of times. These entrepreneurs have followings on Reddit, on Medium. It's also 24 hours a day, 7 days a week, he said. Gensler also questioned the real value proposition of most of the tokens he sees as crypto securities. If there's a good or service, we can understand that, he said. What's the value proposition of actually having a decentralized token? Many of these projects are just speculative investment contracts, he said. Even Bitcoin, which is widely seen as a commodity, is speculative, he said. Investors should be wary, they should be careful, they should be ready to lose 100% of their assets. If you can find a website, if you can read about them in CoinDesk, it's likely that you're making a bet on those entrepreneurs, Gensler said. Elizabeth Warren pushes back at blockchain lobbying efforts. U.S. Senator Elizabeth Warren DeMass has sent a letter to the Blockchain Association, CoinCenter and Coinbase asking about how many former government employees or elected officials are associated with the trade group/exchange. The lawmaker asked for the groups to list the officials and their previous roles. A new kind of insider trading. Hedge-XDeFi bets might attract SEC's attention, experts say. The pseudonymous developer behind crypto options trading platform HedgeX seems to have bought a third of all tokens tied to another platform they developed called Whiteheart before announcing that Whiteheart would shut down and would liquidate its treasury. Price went up, and HedgeX looks to make a large profit. Crypto trader turns $1,000 into $100,000 on Solana's newest memecoin, Dog with Hat. We've entered what I like to call the silly season. People are arbitraging all sorts of weird stuff. For example, this. Click Danny's profile for more examples of pouring money into things in hopes of a quick return. Next week, as has become tradition around these parts, CoinDesk's regulation team will share what they're expecting or watching out for next year. But I also want to hear from you, our readers, on what you will be watching or expecting in 2024. If you want to weigh in for a future edition of this newsletter, shoot me an email with a brief 100-200 words explanation, alongside your name or handle and interest in crypto. This week there do not appear to be any hearings or events of note this week. Slate's Nitish Pawwa dug through court exhibits from Sam Bankman-Fried's trial to look at how exactly he was involved in what was, notoriously, one of the most expensive races in the 2022 midterm elections. Fortune, the Office of New York Attorney General Letitia James is using the lawsuit against Gemini and Digital Currency Group to push again for state legislation that would give it greater oversight over the crypto industry, in conflict with the New York Department of Financial Services, reports Fortune's Leo Schwartz. Forbes Bhutan is building a megacity to spur economic development, reports Forbes. If you've got thoughts or questions on what I should discuss next week or any other feedback you'd like to share, feel free to email me at nick@coindesk.com or find me on Twitter at nickheilst. You can also join the group conversation on Telegram. See you all next week.